The S&P 500 fell 2 consecutive days after closing with a new all-time closing high. Is this a pullback for the dip buyers or a trap for the latecomers? Welcome to another S&P 500 analysis. This is the midweek edition. Today is November 10, 2021. In this video, we'll analyze the S&P 500 price action along with the other major market indexes and the S&P 500 ETF, SPY, the NASDAQ 100 ETF, the QQQ, and the Russell 2000 ETF, the IWM. In addition, we'll take a look at the latest price action on gold, silver, and crude oil. Now, before we take a look at the S&P 500, let's take a look at the market sentiment and the internals. On this sentiment chart, we noticed the VIX came up to near the 19 level today. And the put-call ratio also came up to close to the 0.6 level, with the S&P 500 closing down almost 39 points, or 0.82%. The market participants are showing a little bit of fear and taking on less risk now. And for the last 2 days, the up-down volume ratio was negative, with more down volume than up volume. Also, the declining issue outnumbered the advancing issue today by a margin of 1,235. And during the last 2 days of decline, the number of new 52-week highs still outnumbered the new 52-week low. The NYSE cumulative AD line is turning down after making a confirmed high with the S&P 500. The NASDAQ 100 closed down more than 234 points or 1.44% today. It did have a positive up-down volume ratio on Tuesday, but today's decline, there was a negative up-down volume ratio. There were 2.5 times more down volume than up volume, and also the declining issue outnumbered the advancing issue by a margin of 2,076. The new 52-week low outnumbered the new 52-week high by a margin of 9 issues. And the NASDAQ cumulative AD line also turned over along with the NASDAQ 100 after making a slight positive divergence a couple days ago. That was on Monday, when it made a higher high, while the NASDAQ 100 actually closed below the Friday's all-time closing high. So the sentiment and the internal are showing signs of market pulling back. Market participants are being a bit cautious, and the internal are not at an extreme bearish level yet. Now let's go and take a look at the price action of the S&P 500 and the indexes. Now, from this steady S&P 500 chart, as you can see that the index pulled back a little bit in the last couple of days. Remember last week video, we're basically looking at one possible upside scenario is to break above this trend line here, essentially break above this channel and come up to this 141 extension, somewhere around 47.46, essentially targeting 47.50. And the downside scenario would be coming back down and possibly check this this high point here at 45.45. So we're essentially looking for this level of pullback here. If it continues, we are still looking at the possibility of coming down to target this 45.45 level for the S&P 500. And looking at this SPY, the ETF for the S&P 500, if it bounces back up, then we're essentially targeting 466.50 or 467 level, basically this area here. But if it continue to come down, the first level that we want to see is we'll be able to find support at 461.50 or 461. That's basically this zone here. And if it couldn't hold this level, then we're essentially looking at 457 and 456 area, then possibly down here 454. And for the NASDAQ 100, we're basically looking for this thing to continue to move up to this 16,833, this 141 extension, if the index was continue to get above this 127 extension here. But as you can see that after Friday's closing high, it pulled back into this channel, and right now we're essentially looking for the possibility of pulling back to this level here, somewhere around 15,700 area. And for the QQQ, we're essentially looking for to break to this 387.53 and possibly come down to 382.78 on the downside. If it come back up, then we basically are looking at the 394.89, the first level of potential resistance. And for the Russell 2000, we saw it broken out from this high here, this all-time high, and right now it seems like it kind of stalled. We were essentially looking for it to see would it be able to possibly come up to this 100% extension or 1x of this range here, this 1x extension to 24.98. You see it's pulled back a couple of days, and right now we're essentially targeting this 2360.20, essentially the previous all-time high here, and see would it get a bounce off of that level. If it doesn't, then we are basically looking for this thing to come back in and retest this possibly somewhere around this 2300 level. So for the IWM, the ETF for the Russell 2000, if it bounces back up, then we're basically looking at 240.88 or 241. But if it continue to move down, then we're essentially looking at this 234 area here, and possibly down to this 232. Now the Dow Jones Transportation also pulled back a little bit, and we're basically looking at this possibility of 16,170. And the Dow Jones Industrial, after making a 1x major move here off this range, it is pulling back and sitting right up at this trend line here, this little bit of a intermediate channel. So if it come back down, we are essentially looking at this 35,625, this pivot high as a first level of potential support. And if that doesn't hold, then we're essentially looking for it to come back down to somewhere around 35,150. Now let's take a quick look at the 10-year yield. As you can see, the 10-year yield came up today, and it went up to 15.6 or 1.56%. I wouldn't be surprised to see, again, we're basically targeting this 1.765 here. And today we saw the US dollar came up to near the 95 level. So right now we're essentially still monitoring to see if it would come up here to this 95.70. But if it decide to pull back, then we essentially are looking at this 94 area as a potential support. And we did see the crude oil pull back a little bit with the strong dollar after getting close to that $85 mark. But we're still monitoring for the possibility of getting above the 85, and it get to the 85, then this 90 or the 90.43 will be the potential target. But if it continue to pull back, then we're essentially looking at this 76.98 or the 77 level for the first level support here. And for the precious metal, looking at silver here, we see that silver actually had a little bit of an inverted head and shoulder pattern here. And here's the neckline. If it could break out above the 24.92, essentially $25 level, then we could see it possibly come up to this 100% major move at 28.43. But there is a potential resistance up here at 26.67 here. So keep an eye on that level. If it break through to break above the 25 level, and possibly making this inverted head and shoulder play. But if there is a fake breakout, then we could see a pullback to this 22.72 area. And for gold, actually, gold broke out of this inverted head and shoulder pattern, in which that I was a little bit skeptical about because of the magnitude of this pullback here. But in regardless, it broke out to this 1836 level. And right now it's entering this zone here, this 1846 zone. So if we could continue to push through, then we're essentially looking for 1923. The 100% major move is 1995. But beware, if there is a fake breakout, then we could see it come back down to retest this 1804 level once again. Now let's take a look at the ES, the E meaning S&P 500 Future. And right now we're essentially seeing a poor high that was put in today. So this poor high will eventually have to be taken out. So that will sort of kind of give us an indication that we could see the S&P 500 come back up to at least to the 4680 level. Although there are no unfinished business up here at this all-time high level to indicate that the ES or the S&P 500 will come up and make another new all-time high. So right now, if it come up and take out this pull high, we could see it might set that as a trap and then come back down and clear out all these unfinished business. Now, if it comes down before it come back up to make this pull high, to clear this pull high, let's say come down and clear up all these unfinished business, then we get a bounce back up, then that would be a possibility of looking to buy the dip, right? But if it come up and then come back down, then that could be a trap. So right now, we still have to monitor the price action and see is the S&P 500 continue to come down and find support near that 4,600 area. And that's basically what we are monitoring for the E-mini S&P 500. But if it goes above the 4,680, then we want to see would it be able to come back test and then push into a new high. But if it reverse back down, then it could set up as a trap. So I hope you find this video to be informative and give you some insight of what are some of the possible price scenarios to keep an eye on. And be sure to smash that thumbs up to help me promote and share this video. Thank you for watching and stay safe.